Welcome to the Pacesetter Pod, where we explore and reveal the perspectives, insights, and approaches to deliver great results and growth in your agribusiness through better execution. Here's your host, the Integration Pacesetter, Joe Mosier.
Welcome, Pacesetters of Agribusiness, to another episode of the Pacesetter Pod. I'm your host, Joe Mosier. Real quick, before we get to today's episode, another reminder to please be sure that you hit subscribe so that you never miss an episode of the Pacesetter Pod and you never miss any of the great content and conversations that we publish each week to help you get better results in your agribusiness. Now, you may remember that back in April of this year, I released an episode called Ag's Asset Problem and Rural Blight. If you missed it, it's episode 111. It's under 30 minutes long. I'm going to add a link to it in the show notes, and I would encourage you to go back and check it out. That episode is, to date, the highest engagement episode we've done without a guest. Guest episodes and solo episodes perform a bit differently, but within that solo episode format, this is far and away the one that got the most engagement, the most feedback, the most participation and interaction with our listeners. Honestly, when I was recording it, I just felt strongly compelled to talk about it, but I wasn't convinced that I really had anything new to say. I also wasn't convinced that people would be all that interested in what I had to say about it. But more than 100 episodes and 2 years into podcasting, this episode highlights again what a mystery it is, why some episodes just absolutely rip when they get released, while other ones that I think are going to perform really well sort of stumble along. You never really know what's going to resonate with people, and that's why you just keep trying, and it's all about the reps. But I digress. The point is, I did an episode and it struck a chord. Now, the main thrust of the episode was really around a set of ideas. Some of those ideas were, we have small country elevators. They've long been the vital entry point for farm production to the agricultural supply chain, and that they're increasingly at a disadvantage. Another set of ideas was that the market now values speed over space and logistical efficiency over local presence. The show talked about the inefficiency, the labor intensity, all of the asset reinvestment needs of small country elevators, and how those cumulated effects make it tough to compete, and how operating conditions are likely to only get more challenging from here on out. And we sort of culminated by saying our North American grain industry has an asset problem, and that it's a secret to none of us, but a topic that receives insufficient attention relative to the scope of the challenge. So in that episode, if you didn't listen, or if you did and you kind of forgot about the details, we talked about what has happened over the decades as the asset-intensive and asset-heavy, capital-intensive, thin-margin grain handling business has found itself overbuilt. And more specifically, how it's been overbuilt not just with too many locations, but too many locations too close together, perhaps of the wrong size, and increasingly of the wrong handling and efficiency capabilities. The farm has changed, demand markets have changed, the transportation infrastructure has changed, but the grain elevators, in many cases, are fixed assets. They have not evolved, and it increasingly puts pressure on them. In the conversation, the episode culminated in me challenging listeners to ask the hard question. The question of, if you didn't own the asset today, would you build it or buy it? And then we challenge you to do something about it. But I also recognized then and now just how vexing it is for a number of reasons. Customer, financial, operational. There's a lot of reasons that make taking action against this problem really, really difficult, if not nearly impossible. And so to summarize that, I was in that episode long on commentary and pretty short on solutions. I'll admit it. But near the end of the episode, I sort of put an Easter egg in the program. And at the 27-minute mark, give or take, I invited listeners to reach out with ideas. I asked, what have you tried? What have you learned? What are you currently trying and learning? What have I maybe missed in my thinking? What did I get wrong, etc.? This was an invitation to help aggregate and then amplify some of our best thinking, not just this problem, but really some of our most persistently difficult and structurally challenging ag industry problems. Why did I do that? Beyond wanting to hear more and amplify the thinking, it's really a reflection of a value that I have around feedback loops. And I think feedback loops help to improve thinking. In a podcast, you're always learning out loud, right? Unless you presume that you know everything and you do carefully curated, scripted, controlled episodes where nothing new is ever, nothing surprising ever comes out. If you don't do that, you are in fact going to be learning out loud. Podcasting is also about being wrong publicly and in perpetuity. We don't take down any of our old episodes. I think that's a really important thing. One is as cringe as it is for me to go back, if I ever did listen to very early episodes, that is part of the journey, right? That's part of the breadcrumbs of this project, of my business, of my own learning journey. And I think it's important that we maintain it out there. But also, why did I do this? Podcasts are microphones, not megaphones. The intention should be the distribution of ideas, not drowning out all the others. And so I asked for the feedback so that I could improve my own thinking and address any gaps in how I was looking at it. And you all really stepped up. You rewarded me by sending DMs, emails, texts. Some folks picked up the phone. It was awesome. And I just wanted to say thank you. Now, today's episode, I want to talk a little bit about what that listener feedback was, because there was a lot that was additive to what we talked about. And since the first time we talked about this was so seemingly popular, or maybe it just it angered you all so much you couldn't help but listen in, let's share what I heard from those folks. I want to reward the folks for taking the time to share their input, and I want to do them the service of helping get those ideas out there. So here's some of the main takeaways of things that I heard from all of you, the listeners. We are at a tipping point for an elevator network that was built for row crop ag, which has itself undergone immense transformation in the scope and the scale of efficient production, handling, and distribution. When I say we're at a tipping point, what does that mean? Well, many of you pointed to the fact that people said everything, but that's perhaps too broad of a statement, but everything or nearly everything is antiquated, it's slow, it's inefficient, it's expensive, it's pretty tough to run safely. So that is part of this tipping point, is that this problem is a problem of accumulation, and nothing is going to change in the external market such that these problems become less acute, less painful, or solve themselves. They're just going to get worse. The feedback very much validated the sentiment that the market values speed over space. Space is still important. Not all parts of the national production ag network have on-farm storage. And where they do have on-farm storage, they might not have the right amount of storage, the right segregation, etc. So space is still important, but the market is valuing speed over space. Some of the feedback was that within the country elevator networks that are still owned and maintained today, there's some very practical and financial limits to the potential for technologically advanced retrofits. Some of these elevators just aren't set up for some of the technological changes that we see in new construction that really provide some efficiency benefits. They're just not practical, or they're not financially feasible in these small assets, meaning the opportunity to upgrade them, bring them up to the waterline to compete with their more modern competitors just might not be there. I heard from folks that you cannot sustainably run a network of small, slow truck houses if you're exclusively feeding longer supply chains that are really just hungry for the feast of shuttles, not nibbles of gravity wagons. So if your demand market is enabled through these large terminals and these shuttle loaders, there's a limit to how additive and how financially profitable and efficient the small truck houses are going to be to feed those systems. At some point, it makes sense for basis push to just put that semi on the road for another 15, 20 miles and deliver straight to the terminal, forego the handling loss and the shrink by dumping it in the country elevator, reloading it out again. And so as that happens, as those terminals become more hungry for more grain and longer trains, etc., it's going to continue to put pressure on it. There was a shared sense among listeners that there's a whole basket of unattractive options. There's no good choices to make here, right? It's just a degree of how bad and painful the decisions are. And overall, I would say that people largely agreed with or validated the headlines of the episode, that we do have an asset problem, that we do have a rural blight problem. But more interesting to me than folks saying that they agreed with me was observations on areas where my thinking was incomplete, or I maybe failed to account for some of the localized grain economics, the localized S&Ds, or some of the strategic value that some select assets can have. Strategic being not in some abstract sense, but rather very much advancing a company's explicit strategy and strategic intent in a local market. So what do I mean by the failing to account for these localized contextual factors? I have a few here that I jotted down. In some instances, folks have actually converted country elevators to co-op storage, which, if you don't know what co-op storage is, it's where a number of producers might go in, and I'm going to use this pretty general terms, but buy up an elevator and agree to commingle their storage. They have an allotment, for example, within a given space. I know it's an imperfect definition, but we'll go with that for now. And the benefit for a commercial handler in converting space to co-op storage is, one, of course, you get it off your balance sheet, you get it out of your network, and that available space, that storage space, accrues to the local producers, but without the competitive threat of a third party coming in and buying that up and now becoming a thorn in your side, where they start to grab some of those bushels into that elevator, and they find a way to, maybe they can operate it profitably, maybe they can't, but nonetheless, it causes pain and friction in your local market.
Poorly executed mergers and acquisitions destroy more value than they create. They can set your company back years. To defend your firm's position in the marketplace, you need access to the leading practices that unlock the greater potential of your people, processes, and systems. If you are undertaking a company transformation or pursuing an acquisition as a vehicle to grow, set up a call with Joe by visiting www.moshercg.com.
Some of the other localized options, I heard about the phenomenon of quote-unquote accidental elevators, where a farmer will build a bin, he or she may build another one, then they build another one. At some point in time, they upgrade the leg, they build another bin, they add some better loadout capabilities, and all of a sudden, they've got a commercial scale elevator. And it causes them to look and say, hey, what if I was able to diversify my business and generate a return on a capital investment that I've put in the storage and handling for my own production? So if you recall, my previous episode referred to the idea of selling space to local growers as being a relatively rare lever to pull, right? That we all talk about, we could sell this elevator to a local producer, but that's not going to be a solution at scale. There's not that many elevators that are attractive to even the farmers, and not even fewer farmers that would be interested and have the financial wherewithal to be able to do it. But the feedback suggested that if this is a reverse engineering issue, perhaps where something has already been happening, meaning this addition of storage, and I didn't really give it credit. So farmers are inherently entrepreneurial, and there may be more folks out there that like the idea of using their on-farm construction of bin storage and handling capacity and diversifying their business by getting a return on space, not even just a return on acreage. You know, the return on acreage being the conventional business model where how much I can produce per acre imputes a certain amount of earnings for the business. Well, now I have that, plus I've got excess space, and perhaps I am now in the elevator business. I spoke with one listener who said that their business is actually building a business around strategically located and logistically integrated truck houses. So in some cases, they were buying defunct elevators that other commercial operations didn't want or didn't need. In some cases, they were buying these accidental grain elevators where a farmer perhaps has invested a certain amount and suddenly is in the elevator business, but decide they want to exit. But the idea here was that if you know your local market and if you can trade effectively around it, you might be able to generate a return that clears the hurdle thrown up by all those headwinds that we've discussed around inefficiency and capital intensity and market valuing speed over space, etc. The idea being that's probably more suited to hyper-local operators who know a specific trade area, they know that producer community, and they're not necessarily incented by these longer tail, longer supply chain investments. And they have the benefit of being much more focused on a specific area. And in that context, you might be able to take these truck houses and create profitable businesses from them. I had a listener talk, and this is a really novel idea that I played with. I don't know exactly how it would work, but what if there was something similar to the soybean checkoff? Sort of an elevator checkoff. So think about this as some structure whereby market participants that are all collectively looking to rationalize the size, the location, and the efficiency of assets to today's market needs. Maybe everyone makes some sort of a nominal annual contribution into a collective fund. And that fund then over time would decommission and demolish certain assets and potentially even bear the cost of the reclamation and the restoring land to suitable use to comply with whatever its present zoning or local master plan requirements might be. Perhaps in this context, land ownership underneath where that elevator was would revert to the local municipality as a balance sheet asset, and they could leverage it for further economic development. I don't know, but I think the idea of a sort of elevator checkoff, it's so radical that it's easy to dismiss. But if you actually have to think about it, maybe there's some regions, some jurisdictions, some communities around the country where that actually is a pretty feasible way to pool resources and over time solve this asset problem and this rural blight issue. Now, as I get towards the end of what I want to share today as part of this Asset 2.0 review, that was a sort of, let's say, a basket of feedback, a mosaic of different ways that people are looking at value being available to them through country networks. Again, all of it sort of making for more robust thinking and filling in some gaps and holes in the previous episode. But there's one situation, and I'm not going to name the company, but one where I'll say that there's actually a winning formula that they've seized upon. And this was one grain handler that reached out to me to share their perspective and serves as an interesting case study. So some of the main points from my conversation with this grain handler, this domestic grain handler, was that truck houses are a problem, but usually only when they're isolated. They're tough when they're close together, but if they're close to a demand market, terminal, shuttle loader, ethanol, etc., you still can find ways to make them work. Now, this particular company had strategically, over a number of years, shed 100% of their truck house assets unless they met very specific criteria. And what was interesting about this, and I'll talk about some of the criteria here in a moment, the criteria wasn't strictly around whether or not they could produce a positive location P&L, though I'm guessing that's also part of the conversation. Rather, they said, we're not going to operate any truck houses at all unless they meet certain criteria. And that kind of rigorous thinking is always just very interesting to me. So what was some of the criteria? One, the elevator could originate bushels that they wouldn't otherwise touch. So if there was any sort of scenario by which they say, well, we could probably more conveniently get a touch of those bushels, but even without this asset, we could still probably find a way to get a chunk of them or a majority of them, that was a disqualifier. So this kind of flies in the face of the idea that when they're isolated, it's a problem. This actually said, okay, look, if we can touch bushels that we wouldn't otherwise touch and financially get them into our supply chain, that's worth looking at. They also said, okay, as an alternate to bushel origination, what if we set up these locations for identity preservation, for specialty production? We will operate truck houses if we can run them as IP facilities. Something that they said here was very important, though. They do this when the existing production creates the storage space demand. They have had no luck, and I assume they've tried it based on their comments, but they've had no luck in adding IP space as a way to entice specialty production that they need for their supply chain. So this wasn't the situation, but let's say you're a grain handler. You've got a relationship with a mill that handles white corn for tortilla chips or for tortillas or whatever it might be. You're saying, wow, we've got this elevator that we can't really put a whole lot of corn and beans through right now. But boy, it's strategically located within X number of miles of that white corn mill. What if we switch that to an IP house? and try to work with our producers to get them to plant more white corn. We could kind of create this end-to-end supply chain from the producer through us to the mill. This particular handler I spoke to said that they've had no luck with that. But when they had white corn production, again, that's not the specific example, but in this sort of hypothetical, if you have white corn production and you're segregating it within bins within the elevator, but the long-term prospects for that elevator are not all that optimistic, looking across all the commodities it handles, they would then say, okay, look, what does the model suggest if we made this exclusively a white corn house? It provides a very interesting value proposition to that mill to know they have an IP location that's going to originate and then aggregate much, if not all, of their raw materials. It speeds up the truck line of these smaller elevators because you're no longer waiting for the pit and the leg to clean out to move to a new bin. I mean, everything coming in is of the same commodity type. And so that's, rather than trying to flip an asset to an IP house and then hope the production follows, they would do that in response to a signal in the marketplace already. And in the other criteria is in all cases, whether it was incremental bushels we get a look at that we wouldn't otherwise, whether it was this is a strategically placed IP house, etc. In all cases, that handler has set a max wait time for farmers in line. There is a universal definition within that organization around what too long in line means. I didn't ask what that is. I won't speculate here, but just know that they had set that standard. And every time a truck pulls in, that elevator, frankly, all the elevators, but this country elevator is on trial for its life. If the asset cannot be made to reliably hit that wait time target consistently, if not every time, it will be in play. So what that does is it creates a sort of an operational and an efficiency threshold to help you say, okay, look, what would it take for us to be able to hit that number? What kind of upgrades are required for us to keep that line moving? And if that's not a financially feasible investment, and you're going to have people waiting for 45 minutes or whatever it is in line, if you can't reliably convert it to an IP house, if you can touch those bushels another way, they're very unromantic, unceremonious, unnostalgic about it. Unsentimental, perhaps is a better way of putting it. That elevator is no longer part of the complex. And so what has this meant for their business? Again, I said that they have, over time now, chosen to run a very limited number of truck houses. So few, in fact, that you can count them on one hand. This was a multi-year journey, but the business operated many more. And over time that they developed and applied the decision criteria, they now have this precious few country elevators that are not an asset problem. They're actually aligned to and enabling their strategy. They've got a strategic set of assets that are no longer part of rural blight. They're no longer struggling to survive. They're no longer orphaned assets that are a relic of times past and more based on local relationships and unwillingness to change. There's a business reason for them to exist, and that's why they're there. And so that's some of the stuff I heard, and I wanted to revisit Ag's asset problem today because, one, it seems, again, like something you, our audience, had strong feelings about. Two, again, many of you took me up on the invitation to share feedback and insights, and I think it's worth recognizing and sharing what those were. And three, this is a perfect example of the impact of being open to thinking and analysis that evolves and improves in real time. You know, there's nothing wrong with your opinion evolving and changing as new data and perspectives come in. I think that's the signal of rigorous intellect and analyzing issues, not getting so calcified and fixed in one way of looking at the world. If new facts come in, the reaction needs to be, let me evaluate that and think about how that relates to what I was already considering, not how do I jump to sort of explaining that away, why that doesn't apply, why that's not credible. The ag economy is never a finished product. It's never in its end state. And so I question whether any of us should ever arrive at firm, immovable, irrefutable conclusions about the state of the economy, the direction, the prospects, the likely future outcomes of the industry. It's exciting to think about this out loud, to make observations and have them challenged, and to come out the other side with crisper and more complete thinking. And for me, even with the knowledge that my thinking has room yet to improve. So thank you for all of you who tuned in the first time and shared your perspectives and reached out. Thank you to everybody who's been commenting and providing all kinds of encouragement for this program. For folks that have been helping us think about new topics we should be talking about and making connections with new guests we should have on the show. This is something that I invest in and I produce, of course, each week, but it's more and more over time becoming a product of the community that we have around the Pacesetter Pod. And I just wanted to thank you for listening to today's program, for listening to today's episode, and for being so engaged in these conversations. I never take the time that you spend listening to the podcast for granted, and I certainly hope this was of value to you. As I always say, if it was of value to you, please share it with others who you think would find similar benefit from it in their agribusiness. Thank you for joining us today, and as always, I look forward to having you join us again right here on the Pacesetter Pod.
This is thepodcastfactory.com.